Welcome to Home Buying Made Easy, the podcast where we pull back the curtain on mortgages, real estate, and everything the big banks hope you never figure out. I'm Rachel, co-host and producer of the show. Let's get to it.
Welcome to Home Buying Made Easy. I am Michael, and we have Rachel with us today. She is hosting the show, giving the questions, helping to guide us in the direction that we should follow. Go ahead, Rachel.
Okay, that was quite an intro.
Yeah.
That was a new one. Okay, so today we are covering co-borrowers, co-signers, and non-occupant borrowers, and what all those mean, what's the difference between them, and yeah, take it away.
I have no idea what you just said. You said something about borrowers,
Co-borrowers,
co-borrowers,
co-signers,
and co-signers.
Yeah, like the difference
and
between the three of them.
Non-occupying co-borrowers.
Yes,
That's four.
that's three.
You said co-signers.
Co-borrowers, co-signers, and non-occupant
Okay.
borrowers.
Oh, okay. There you go. Okay.
Three of them. I know
Gotcha.
how to count.
I thought you said borrowers. That makes four.
I mean, if
But
you want-
borrowers have to be on it. Okay.
Yeah.
So if you were a borrower and you happen to need someone else to be on the loan with you, maybe it's for income reasons or to help you qualify for the mortgage, then you would be doing it one of two ways. You would have a co-borrower. Maybe they're going to live in the house as well, and they're a co-borrower. That could be in a spouse situation that they are a co-borrower, but sometimes that's maybe two friends are going to buy a house and they would be co-borrowers as well. That's what co-borrowers are. So let's talk about co-signers. This is a myth on a non-Mythbuster Monday.
Ooh.
Because co-signs is not something that happens in mortgages.
Huh.
You co-sign for a car.
Yeah.
You co-sign for maybe credit cards, or I mean, you can co-sign for other types of things. You do not co-sign for a house, for a mortgage. So you can have co-borrowers, or you can have, which are people that would live in the house, or you can have what's called non-occupying co-borrowers. So let's say you are a younger person that, I'm not trying to pick on young people. I'm saying maybe you're brand new.
Make me an example.
You
Me.
are a younger person.
Rachel.
But
yes.
here in a couple of weeks, you're going to be an older person because
Okay.
you're not going to be younger. You're going to be a year
True.
older,
It's
which makes
true.
you a little bit older person. There you go.
Me as an example. Okay. I'm
Okay,
23.
so it 23, almost
Yes.
24. And if you were going to buy a house, and let's say you couldn't qualify for that house, then I could sign with you as a co-borrower,
Mhm.
meaning we could both buy the house together, and I would be considered a non-occupying co-borrower because I already have a house. I'm
Yeah.
already living in my house.
Mhm.
You would be living in that house, and I would be non-occupying. I'm not occupying the house, but I am still a co-borrower. That would be an example of a co-borrower that does not live with you.
Mhm. Yeah.
That was my answer.
That's the end of your answer.
That's the end of that answer. You have any questions?
Yes. So what are the risks and benefits for each of, well, I guess both of those, the co-borrowers and a non-occupant co-borrower?
Okay. In the co-borrower situation, you're equally responsible for the mortgage and you are in the house. Let's say you're just friends and just like two guys decide they're going to buy a house and they're just friends. And then one of them says, "Hey, I got a job and I'm moving to Seattle, Washington, or Utah or Africa." Doesn't wherever they're moving.
Why those
There,
three?
I don't know. I just picked three places, like
Okay.
just to pick them.
Africa is a continent.
I know that's a place.
It is, but you named two states and then a continent.
That's because I went overseas. You want me to say Ireland, London?
I don't know.
I I use a country, do a city. You want me to get
Okay.
specific?
Homeboy's moving.
Homeboy's moving.
Homeboy's moving.
Yeah, I hear you. So if he's moving and now he doesn't want to own the house anymore, well, he's obligated. He's on the mortgage.
Yeah.
So the other person would have to refinance them off that mortgage in order to remove them from the mortgage.
Yeah.
And if you're on the mortgage, you're on the deed, which means you're on the property. So that there's a risk there when you're talking about two friends doing that and buying a house together. The other one would be like in a co-borrower, a non-occupying co-borrower situation. That could be two things. One, the non-occupying co-borrower may say, "Oh yeah, I'll sign for you. I'll help you. I'll do that." And then they'll go through that mortgage process, and then all of a sudden you don't make payments, and they're a non-occupying co-borrower and they don't have the money. You're tanking their credit.
Yeah.
You know, so I would say if you're a non-occupying co-borrower, you better be prepared at all times to be able to make that mortgage payment because it belongs to you. It's partly yours. And so you need to treat it as though that's what it is, that you're paying for it. The other risk, I guess, this would be the negative. There are some people that will gladly help you. And I don't want to just say parents would do this because I think parents would do it as well. There are some parents that are overly put your thumb down on you kind of person. So if that's the case, you need to be very wise who you pick as your non-occupying co-borrower. Because if I was super mean and I am your non-occupying co-borrower, I can make your life miserable by, let's say I text you on the 28th of every month. I call you on the 29th. I call you again on the 30th, and I do it every month. It's going to drive you nuts. It's like, do you have the mortgage? Are you going to pay the mortgage? Are you going to get the mortgage paid? You can't be late. Don't be late. Don't be late. Like, that would drive you nuts.
Yeah.
Well, I mean, there's people like that. No, I don't think I would be that kind of co-borrower, but like that does happen. So you have to weigh out the risk. They do have a say in your mortgage. So you need to make sure it's going to be a good relationship for everybody.
Yeah. So in the potential scenario of you're my non-occupant co-borrower, how long, or is there a timeline until you can be either refinanced off or something? How does that work?
30 years.
That's the entirety of the loan.
I know. That is the whole loan. Okay. So you would have to remain on the loan. The co-borrower would have to remain on the loan as long as you could not qualify. So, I mean, the minimum would be 6 months, but that's just because usually lenders want to see some type of a history before you start, making adjustments to your mortgage. So, I would say you definitely need to show a history. So I would say if you could qualify on your own within a year, then you could do a refinance and refinance them off if the rates make sense to do so.
Yeah. Okay.
And a lot of times a non-occupying co-borrower may want to be removed and you have to deal with that too.
Yeah.
I mean, they may just say, hey, get me off of this.
Let me out.
Mm-hmm.
Okay. Yeah. Do you have any other advice?
Call and get advice before you try to do anything, before you go too far. Find out exactly what you qualify for, because that is super important. You don't want to overextend yourself, and you certainly don't want to be in a bad situation like I just described. Mm-hmm. Hope that helps, and we'll see you next time on Home Buying Made Easy. I am Michael, and that is
Rachel.
See ya.
That's a wrap on today's episode of Home Buying Made Easy. If something we covered today helped you see things differently, share this episode with one person who needs to hear it. You might just change their financial future. If you're ready to take your next step, our team is standing by. Call or text us directly at 615-499-6335. You can also reach us at michael@dendyteam.com or use the link in the show notes below. New episodes drop every Monday and Friday, Hit subscribe so you're always first in line. And if this show has brought you value, a 5-star review takes 30 seconds or less and helps more people find us. From our team to you, let's make home buying easy.